So, as promised, we are looking at the federal budget, and we're going to be looking at the budget process, types of budgets, and revenue expenses, which is sort of mixed in through the presentation. We'll be looking, this is all fitting into preliminary topic 6, government and the economy, in particular looking at that federal budget. I'm going to try and speak quickly because last night's video was way too long. So, unless your name's David Kosh, you are probably not overly excited about learning about the federal budget, but it is a very important tool that the government utilises in order to achieve its economic objectives. So we're really looking at this understanding of fiscal policy, and that is the macroeconomic policy utilising taxation and spending by the Commonwealth government through their budget in order to achieve certain economic objectives. And those economic objectives can be anything from economic growth through to reduced or increased inflation, through to reduced unemployment. It really depends on what the government of the time is prioritising. At this point in time, in the post-GFC economy, the Australian government has been looking at this as their main budget strategy. So they read, and this is straight out of their the 2017-2018 budget, their fiscal strategy and outlook. It has not changed really for the last few years. Some of the words are different, but overall the idea is the same. So the government remains committed to its medium-term fiscal strategy of returning the budget to balance, maintaining strong fiscal discipline, strengthening the government's balance sheet, and redirecting government spending to boost productivity and workforce participation. The key part of this really is this idea that they are trying to achieve a medium-term fiscal strategy of returning the budget to balance. Every year at about April, when they start talking about the budget, the government will ramp up its talk about the need to get back to balance. And if you're into politics, you'll know that the current government blames the fact that we're in budget deficit on the previous government. Really, as economists, we're looking at how the government will achieve this balanced budget and what effects this will have on the economy. I've underlined fiscal discipline because this is an important part, an important term that the government's been using for some time. Sometimes they call it fiscal consolidation. And really this is talking about the idea that they need to reduce spending in order to achieve this balanced budget that they're aiming for. So, first thing we need to understand is the federal budget, and just like any other budget, a federal budget includes revenue and it includes expenditure. In essence, when revenue is greater than expenditure, you will be in budget surplus. When revenue is less than expenditure, you are going to be in budget deficit. So one of the things we want to understand is where our money comes from, or where the government's revenue comes from, and then what they're utilising it for, what they're spending it on. So if we break revenue up into its main streams, we can see that proportionally income tax on individuals makes up by far the greatest proportion of government revenue. So at 47.16% of the government's revenue can be attributed to personal income tax. Fringe benefits tax, of course, is relatively minor. Superannuation, that's tax by the government on compulsory superannuation payments. The next largest aspect is company tax and the resources rent tax, but mostly that company tax, and we know that companies are taxed at 30% of their profit. So that's at about 18.09%. If we scroll down to sales tax, that's GST. So the government gets 15.14% of their revenue from GST. However, that's automatically directed to the states. So the agreement is that the states utilise that. At the bottom here, we have fuel excise and customs duty, as well as other excise. They make up our taxes on those goods that are generally harmful to society, things like fuel or cigarettes or alcohol. We know that the demand for those goods is relatively inelastic, so the government can place a tax on those, and be relatively okay with the fact that this will provide a boost to their income. Sorry. All right, if we look at where taxpayers' revenue is being spent, you can see that a large proportion of it actually goes out to social security and welfare recipients, and that's for a range of reasons, but clearly because we live in a society where we want to help people get back on their feet, and it's good for the economy if we can get people back into the workforce. The rest probably don't come as much as a surprise to you. Other purposes, a lot of that is actually the GST revenue being shifted off to states. But if we look at health, 16.21% of our spending goes to health, education at 7.28%, defence 6.4%, so on and so forth. So the next thing we're going to have a look at is the budget outcomes and budget stances. I'm going to make a new video for this. I hope you've enjoyed.